How can we have many more Dangotes in Africa? Let's look at some of the issues. Indeed, in Nigeria, major firms, including Dangote Refineries, are facing unreliable power and collectively reported to be generating over 6,500 megawatts of electricity, surpassing the national grid's output. In 2024 alone in Nigeria, there were 12 electricity grid collapses. But there is some good news for Dangote's mega refinery, already expanding its capacity to store imported crude, as the upstream regulator, NUPRC, after launching in October its Project 1 million barrels, said it was targeting daily production of 2,500,000 barrels per day in the short term. This will be more than enough for the needs of Dangote Petroleum Refinery and 8 other domestic refineries, requiring 770,500 barrels of oil equivalent per day. Hello and welcome to another episode of Global Business Insights, where we take a closer look at some of the topical business themes all over the world. But first, some US inflation data. Yesterday, December's producer price index, that's a measure of wholesale prices, came in at a 0.2% increase for December month over month, half the expected 0.4%. Dow futures surged after strong bank earnings and also as December US consumer price index rose 2.9% on a yearly basis from 2.7% in November, also as expected. On a monthly basis, CPI rose 0.4% following the 0.3% increase recorded in the previous month. While there was a relief for those fearing an upside inflation reading, given the strength of the economy, most still think it's more likely that the Fed is nearly done with cutting rates. Back to Nigeria and the need to catalyze incubation of small, medium and mega industries in Africa. This cannot be overemphasized to get the hyper growth that is needed to address harrowing unemployment and poverty levels. First, of course, is the business environment. It has to be significantly better, with much more investments flowing in to the continent than we are seeing at the present time. And speaking of investments, OpenAI has appointed Nigerian billionaire investor and one of Wall Street's most powerful deal makers, Adebayo Ogunlesi, to its board. Niyi Yusuf, the chairman of Nigeria Economic Summit Group, comments on what 2025 could look like for business. He's also the managing partner and social sector practice lead at Verraki Partners, a Lagos-based and Pan-African focused business solutions company.
My sense of 2025 will be also a period of progress in the midst of volatility. First, if you look at the budget, inbuilt deficit of about 13 trillion, revenue estimates of about 36 trillion, and that is hugely dependent on crude oil production and also the price of crude oil. But I'm quite happy with the amount that has been allocated to infrastructure. That's well over 4 trillion or so. Also about 4.9 trillion allocated to security, health, education, about 3 trillion each, and then regional development. And so there's a focus on human capacity building, health, education. There's a focus on infrastructure. There's a focus on security, and there's a focus also on just general growth of the 6 regions. But revenue remains a concern. 2 million barrels per day of crude oil, we may not. As of November, we're not doing 2 million, and so cumulatively, we may struggle. I'm more concerned about the external risk than even the internal risk. We have the external risk of geopolitical issues, Russia, Ukraine, Middle East. We have President Trump, we have trade tariffs, and we may begin to see divergence between the US and the European Union. And locally in Africa, we have a region where there's a huge lot of instability in Niger, Mali, Burkina Faso, and those instability could lead and has actually led to insecurity in Nigeria. We need to tame inflation. Second is we need to improve productivity. Productivity of the nation, of companies, and of workforce, so that we are producing more with little. I'd like to see more policy consolidation. Let the fiscal, the monetary, the trade and investment, the social investment, social safety net. Let all four policy leaders continue to collaborate and to complement each other. We'd like to see pro-business and pro-consumer regulations. Regulators must drive innovation. Regulators must drive competition. Debt to GDP, it's higher than the 40% that we need to. But again, I'm more concerned about our debt service. And so debt service of about 16 trillion, it's significant. And so we'd like to see more effort on public financial management, more financial discipline in terms of debt management, in terms of the efficiency of government spending. That is important. We have quite a number of dead public assets, and we need to optimize them, we need to commercialize, we need to privatize. And I think lastly will be around the soft infrastructure, rule of law, judiciary. Those are things that are important. And so when we talk about pro-consumer growth business, we need to have more big business on the continent. We need to have more big businesses in in Nigeria. There are statistics suggesting that we have less than 400 businesses that generate more than $1 billion of revenue every year. Compared there to more than 1,500 of such companies in China, or more than 170 of such companies in India. So we do need big businesses. We know big businesses drive productivity, they generate jobs, they create wealth for everyone. And so government needs to focus on what it can do to support big business. And a few things. One is incentives to drive R&D, incentives to drive export. We need to capitalize sufficiently NESG so that NESG can support the export drives of this company, so that we can leverage after and they can export onto the continent. Procurement rules by Nigeria, procurement rules to drive to consumption of the products of these companies are important. A number of tax holidays, having industrial clusters where we'll have infrastructure to support these companies are also important. And then fast track regulations, access to capital, access to affordable electricity, land, etc. Those are many ways that the government can support so that we can have big companies.
My own list of important conditions for the continent to see better growth include: first, accelerating the removal of trade barriers across country boundaries in Africa, integrating markets within the continent, making it so much easier to move across countries and do business across different markets in Africa. Then you must invest aggressively in infrastructure, especially affordable energy, electricity, logistics, and IT. The electricity issue remains a burning platform requiring a war room approach, especially in Nigeria. Third, Africa must embrace major deregulation. Indeed, protectionism will pick a few winners, while the regulation tends to lead to efficiencies and better long-term productivity, which eventually opens up more possibilities for even more entrepreneurs to come into the market. Africa also needs strong and well-capitalized banks and low costs of funding, either through the capital or money markets. Also, other costs of doing business needs to come down. There's also need to build market confidence. The tone towards business is important. Anti-business sentiment can be discerned, especially where bureaucracy and leadership is out of touch with day-to-day realities of big risk takers. And there is need to support the courage of those who are taking those risks. Incentives also, albeit fiscally expensive, say a lot on whether a country is open for big business or not. And then, of course, skills, technical, managerial, research, and development skills all needed. I would add security, political and macroeconomic stability, which tends to be taken for granted in many other landscapes, but not in Africa, and which, if you deal with it, will reduce the risk premium for doing business. All over the world, we see governments incentivizing major investments by accelerated approvals, grants, especially in the targeted new technology sectors. States are wooing businesses like never before. Rachel Reeves, for example, just back from China, coming back with a bowl of investments, pledges of about £600 million. Nigeria has upped its game in business diplomacy all over the world, as President Tinubu visited France, UAE, Germany, India, Dubai, Riyadh, and others. Indeed, Africa is back on the investment radar as investors come in to shop but still they will be looking closer at what is on offer. Looking at Forbes' list of billionaires, Dangote is number one in Africa, but both South Africa and Egypt have more billionaires on the list. In another chat, we will talk about the importance of small businesses. More of the top business headlines this morning. UK inflation unexpectedly rose at a slower pace in December for the first time in 3 months as hotel prices and tobacco costs eased. Prices rose 2.5% in the year to December, down from 2.6% the month before, also lower than was forecasted. Chipmaker Nvidia has criticized the Commerce Department's new rules in the US, imposing caps on advanced artificial intelligence chips exports, plus extra licensing requirements for AI technology. Also extending prior export restrictions to more than 120 countries beyond China. Nvidia says the rules undermine America's AI leadership, calling it a sweeping overreach, and is also reported to be appealing to Trump for help. The United States also banned imports from over 30 more Chinese entities over alleged human rights abuses. The Chinese Commerce Ministry, in apparent retaliation, has added 7 US companies on its unreliable entity list for their involvement in arms sales to Taiwan. These companies will be banned from exporting to and importing from China or from making new investments in the country. Yesterday, the S&P 500 gave up some of its earlier gains to close slightly up. Dow Jones Industrial Average also added a bit, while the Nasdaq Composite Index slid slightly. Markets were heaving a sigh of relief as it was speculated that the U.S. incoming administration proposals to raise tariffs on imports may be more restrained and phased in gradually to avert a reversal in the Federal Reserve's gains in curbing inflation. This also led to a retreat of the US dollar. TikTok has called a report that China is considering allowing a sale of its US operations to Elon Musk pure fiction. This is as markets continue to speculate on what next for the social media giant facing a possible ban in the US. And in Britain, the competition watchdog has said that it's opening a formal antitrust investigation into Google's search and advertising services. The Competition and Markets Authority wants to know if Google services are delivering good outcomes for people and businesses in the UK. Aluminium prices ticked higher with the EU considering import restrictions on Russian metal, also as Chinese production growth is expected to slow. Oil prices inched up over uncertainty that's on supply with more Russian sanctions. The U.S. Securities and Exchange Commission on Tuesday filed a suit against Elon Musk, alleging he violated securities law by acquiring Twitter shares at artificially low prices. Data just in showed that the German economy contracted by 0.2% in 2024, also the country's second consecutive yearly slowdown. For banks, the results confirmed tailwinds helping lenders and investment houses. JP Morgan Chase topped estimates for both Q4 revenue and profit thanks to better than expected net interest income, fixed income trading, and investment banking results. Growth in investment banking and equity markets revenue also helped Citi in the December quarter. Wells Fargo reported better than expected earnings plus strong guidance on net interest income for 2025, while Goldman Sachs posted results that topped estimates on stronger than expected trading revenue. After the reports came in, beating estimates, JP Morgan Chase shares jumped nearly 3%, shares of Goldman Sachs up 1.5%, Wells Fargo up 3%, and Citibank popped nearly 4%. Earlier today, Asian stocks closed mixed ahead of key U.S. inflation data that could influence the pace of market-boosting rate cuts by the Federal Reserve. In Japan, business sentiment among large manufacturers rebounded. That also helped the optimism. Well, that's all we have on this episode of Global Business Insights. Thanks for watching, and please share and subscribe to follow the channel. This is Bode Oshosami. Bye-bye.